Good morning, everyone. Thank you for joining us today. I am the head of quantitative strategy here in Yeouido. Today is the 4th of June, 2026, and the Korean market is currently navigating a quintessentially complex intersection of macro volatility and technological evolution. We are not here to talk about feelings or vague intuitions. Our focus today is on quantitative outlook, dissecting the numbers, identifying the broken links in global chains, and pinpointing where the real alpha is hiding amidst the noise. Let's dive straight into the data. Before we examine individual stocks, we must understand the gears that turn this market. Section 1 is titled Core Mechanism. Why? Because in the current climate, the Korean market does not move in a vacuum. It is a highly sensitive derivative of global liquidity and the AI supply chain. My objective for this section is to provide you with a high-level diagnostic of the three primary chains that govern Kospi and KOSDAQ. We want to distinguish between what is functioning normally and what has broken, because it is within those fractures that institutional investors like yourselves can find the most lucrative mispricing opportunities. Let's look at the diagnostics. Chain A, our macro liquidity chain, is functioning precisely as expected. With the US 10-year yield at 4.49% and the dollar index at 99.4, we've seen the won slip to the 1,529 level. This has triggered a massive, mechanical passive outflow of nearly 8 trillion won. However, look at Chain B, the AI and semiconductor chain. This is what I call the broken link. Normally, a dip in the SOX index leads to a total collapse in Korean tech. But today, we see an active divergence. Local institutions and retail investors are absorbing the foreign passive dump, specifically in the HBM5 value chain. Chain C remains retail-centric, where high leverage is causing sharp, albeit brief, spikes in volatility. The key takeaway? The passive sell-off is a liquidity event, not a fundamental one. From a behavioral finance perspective, we must categorize these news events into phases. Phase 1 is dominated by the mega IPO narrative. Smart money is rotating out of established tech and Bitcoin to prepare for the SpaceX and Anthropic listings. This is a pure liquidity migration. Phase 2 is the initial shock of the proposed 12.5% Trump tariffs. This is an overreaction driven by cognitive bias. The implementation is months away, yet the market is pricing it in as an immediate catastrophe. Finally, Phase 3 is where the real value sits. Despite the noise, the AI supercycle is extending. Goldman's 12,000-point target for the Kospi reflects this long-term fundamental strength that the daily volatility is currently masking. To keep our analysis rigorous, we've quantified these issues into a scorecard. The tariff risk holds the highest impact score of 85, with a negative Z-score for the auto and hardware sectors. However, observe the quote decay rate. We expect the tariff anxiety to diminish on a weekly basis as diplomatic channels open. Conversely, the Goldman target and the potential Mid-East peace deal are the spikes we are monitoring. If we see a peace deal over the weekend, the refinery sector will take a hit, but the broader Kospi, especially the floating data center segment in shipbuilding, will see a sharp positive reversal. We manage our portfolios based on these Z-scores, not headlines. Moving into Section 2, Strategy and Scenarios. Analysis without action is merely observation. Now that we've diagnosed the mechanics, how do we trade it? This section is the core of our Yeouido strategy. We utilize a Bayesian update model, meaning we've taken yesterday's forecasting errors, specifically the intraday volatility spike in AI themes, and adjusted our probability distribution for the next 24 hours. We are shifting from what is happening to how do we position for the rebound. Let's look at two specific cases of divergence. Samsung Electronics saw nearly 4 trillion won of passive selling by foreign funds. Yet, the price was supported by institutional buying. Why? Because the market realized the sell-off was a currency-driven passive exit, not a rejection of Samsung's HBM5 momentum. Even more striking is Samsung's SEMCO. A 9.6% drop despite a massive target price upgrade from CLSA. We are seeing an extreme mismatch between the reality of the ABF substrate shortage and the technical washout of retail leverage. For a quant-driven investor, this is the definition of a buy signal. This slide illustrates the sweet spot for the Korean market. While the US tech sector is undergoing a necessary rotation due to IPO liquidity demands, the physical infrastructure of AI, which Korea provides, is actually accelerating. We are at the heart of the HBM5 and next-gen server tray production. The broken link I mentioned earlier is your alpha. You are essentially buying world-class AI hardware at a passive discount created by exchange rate fluctuations. It's a rare window that we expect to close by the T+1 session. We must filter the noise. Take the recent Alphabet capital raise. The headlines focused on the $30 billion going to tax costs, calling it, quote, inefficient. This is pure noise. Our analysis shows Gemini's user growth is up 125% and cloud backlogs have doubled. This infrastructure ROI is the real story. It validates the massive capex that flows directly into the order books of Korean semiconductor and component companies. Don't let the short-term accounting noise in the US distract you from the robust industrial orders arriving here in Seoul. Here is our probabilistic roadmap for the next 24 hours. We assign a 55% probability to our base case. This assumes that the 1.77% gain in US night futures holds and foreign selling slows to below 1.5 trillion won. In this scenario, we expect a Kospi recovery of up to 1.5%. The bear case, 30%, would be triggered if the exchange rate breaks 1,535, leading to further margin calls on retail credit. The bull case, 15%, is our tail risk to the upside. A peace deal signing over the weekend could trigger a massive short squeeze. We position primarily for the base case, while keeping stop losses tight for the bear scenario. To conclude, here is your execution guide. First, sector rotation, overweight Samsung SEMCO and SK Telecom. These are your defensive growth plays in a high FX environment. Second, entry timing. Do not chase the morning gap. We recommend a staggered entry, 20% at the open and 80% after 2 p.m. once the passive basket selling usually exhausts itself. Third, risk control. Keep your total exposure at 50%. This is a wait-and-see posture regarding the 1,535 won level. If the won stabilizes, we scale up. Thank you for your time and your trust in our quantitative framework. The Korean market at this level is not about bravery. It's about the cold, hard mathematics of supply and demand divergence. We believe the current passive discount offers a superior entry point for global mandates. I'll now open the floor for any specific questions regarding our Z-score methodology or sector allocations. Thank you.